If you had invested 10,000 rupees in Indian startups 10 years ago, chances are none of it would have gone to a brokerage company. Because investing back then felt complicated, intimidating, and loaded with jargon. And that's exactly what Groww decided to fix. From a small Bengaluru apartment to becoming one of India's most trusted investment platforms and now, getting listed on the stock market, Groww's journey is a masterclass in how to simplify finance for an entire generation. So today, let's decode how Groww executed this vision, what made them stand out, and the powerful business concepts behind their rise. In 2016, 4 ex-Flipkart employees Lalit Keshare, Harsh Jain, Neeraj Singh, and Ishan Bansal noticed something interesting. India was full of young, salaried professionals with disposable income, yet very few were investing. Why? Because most investing platforms felt like they were built for experts, not beginners. Complex interfaces, endless forms, and poor customer experience. The founders saw an opportunity not to create another trading app, but to build trust with first-time investors. And that's where Groww's execution begins. The biggest reason startups fail is no product market fit, meaning the product doesn't truly solve a problem people care about. Groww nailed it from day one. They identified the emotional pain point: I want to invest but I don't know how. Their early mission was crystal clear: make investing as simple as ordering food online. By removing technical jargon, minimizing steps, and offering clean UI, they brought investing to people who never touched mutual funds before. That's product market fit in action, when your product becomes the obvious solution for a real, widespread problem. All 4 founders came from Flipkart, which taught them customer obsession and scalability. They knew India's young investors didn't just want returns, they wanted reliability and trust. So Groww focused on execution discipline, improving small user experiences, automating KYC, ensuring instant withdrawals, and being transparent with fees. They didn't launch 10 features at once. They launched one perfect feature, scaled it, and then moved to the next. This follows the concept of sequential scaling, building strong foundations before expanding breadth. It's slow initially but leads to a rock-solid platform when scaled. Simplicity is a strategy. Groww's interface looks simple, but that simplicity is the result of thousands of small decisions. In business, simplicity is not just design. It's a moat. A moat means an advantage that competitors can't easily copy. When users feel it just works, they don't switch. This is why companies like Apple, Google, and now Groww invest heavily in UX design as a business strategy, not just aesthetics. Groww didn't advertise complexity, it advertised clarity. And clarity builds confidence, which in finance equals growth. Instead of chasing the existing trading crowd, Groww focused on India's first-time investors, a blue ocean market. This is called the blue ocean strategy, where you avoid crowded markets and create new demand in untapped segments. They didn't go after day traders. They went after salaried youth, college grads, and new professionals, people entering finance for the first time. That single focus made them relatable and helped them grow faster than older players who were busy fighting for the same pie. While most fintechs focused on transactions, Groww focused on education. Their YouTube channel, Groww Academy, and blogs taught people why to invest before where. This is the idea of content-led growth, where trust is built through knowledge. When you educate users, you reduce fear, and that automatically increases engagement. Groww didn't say, invest now, they said, let's learn investing together. That emotional positioning was the real growth lever. Finance is one of the most regulated industries. Most startups ignore this. Early Groww didn't. They built a strong compliance-first culture, ensuring user protection, SEBI alignment, and transparency in every communication. This follows the principle of regulatory foresight, understanding that in financial businesses, trust compounds only when governance is solid. That's why Groww survived when others faced licensing or compliance issues. It's not glamorous, but it's smart execution. Once Groww nailed mutual funds, they expanded into stocks, IPOs, gold, and ETFs. But they never rushed. Each vertical was added only after perfecting the previous one. This again ties to scalable layering, building one business layer at a time to ensure stability. And today, that discipline has brought them full circle, from helping people invest in IPOs to having their own IPO listed on the Indian Stock Exchange. That's a storytelling moment few startups ever reach. 8. The numbers behind the discipline. As of FY 2024, Groww has over 8 crore registered users and manages investments worth billions. Its revenue crossed 2,200 crore rupees, and it's now one of the few profitable fintechs in India, a rare achievement in a high-burn sector. That's what happens when execution meets patience. You build a business that lasts, not one that trends. Groww's story isn't just about finance, it's about clarity and consistency. Here are the takeaways every aspiring founder should remember. Build for a clear pain point, not a broad idea. Simplicity is a long-term business moat. Educate your users. Trust is the best marketing. Scale sequentially, one layer at a time. Respect compliance early, it's your invisible asset. Because in the end, the best growth hack isn't viral marketing, it's clarity of mission and discipline in execution. Today, as Groww enters the stock market as a listed company, it represents the new face of Indian entrepreneurship, grounded, tech-driven, and trust-first. A startup built not on noise, but on nuance. And that's how Groww grew the right way. If you found value in this breakdown, subscribe to How They Build Business, where we decode how India's real entrepreneurs executed their way to success, so you can learn to build yours the smart way.